Welcome to Carry On with Carrie Fitts. I'm Carrie Fitts in Tuscaloosa, Alabama. I am the owner-broker of Carrie Fitts Real Estate, and our tagline is a house that fits. So we're going to talk about any hot topics in real estate. We are going to talk about some education, not just specific to Tuscaloosa or Alabama, but just real estate in general. We'll bring some guests in to talk about their experiences in the industry so that we can bring their expertise and get another voice on this podcast. And we can't wait to get started. I'm Carrie Fitts, and today's episode is all about building credit to set yourself up for purchasing a home. Whether you're a first-time home buyer looking to invest, or you've bought many homes in the past, understanding the role of credit is crucial. I have a local lender, Matt Meissner, with me today. And Matt has been in the mortgage business for a lot of years, many years. And we're so excited to have him on the podcast today. Matt, tell us a little bit about yourself.
Absolutely. So first, thanks for having me on your podcast. It's exciting. Of
course.
My first appearance on any podcast anywhere. So so I've been in the mortgage business since 2004. So long enough to see some ups and see some downs. And along the way, we've learned quite a few tricks to help with preparing people credit-wise for their purchase. And I'm happy to be here today and share some of those things with you guys.
Well, we're so excited to have you with us today. All right, before we discuss building credit, let's mention why it's so important in the home buying process. Your credit is a tool that monitors your behavior with money, and lenders use it to assess the risk of lending you money. Maintaining good credit can benefit you by getting a better interest rate and keeping your debt-to-income percentage low, making the mortgage process much smoother. So, Matt, talk to us a little bit about that.
Sure. So when you talk about, you said kind of one of our terms that we use a lot in the industry, which is debt-to-income ratios. And when you look at that in relation to credit, it really is geared around revolving credit, such as credit cards or things that you're able to borrow against and pay down, lines of credit, things of that nature. And one of the easiest ways to get your credit in what would be the optimal position, credit score-wise, is to have a low balance related to the credit limits available on your lines of credit. So sometimes people go out and they get a credit card to start building credit, and it's a low limit card. It might have a $300 limit, and they don't understand that having $200 to $300 on that card, even if you make your payments on time, can actually still negatively impact your score because they look at it as a high utilization percentage. Ideally, 10% of the utilization is where you want to be. Now that's tough for a lot of people to do. Anything really 30% or below is going to put you in good standing. But the lower you can have that balance related to the actual credit limit is going to impact you in a positive way on a credit score.
Okay, so can you, for first-time home buyers, let's talk about them first. Can you tell me or give me a couple of tips, as many as you think are necessary, that a first-time home buyer can do to really up their credit score or build credit if they don't have a credit score?
Sure. One of the most common things we see when first-time home buyers come to us is they think they already know what their credit score is because of the online tools available to them. And one of the things we talk about is how when we pull a credit report at the bank level, it's going to be a different score than what they see online because it's not a consumer model. Now, those online tools are a good gauge. They can let people know the range their credit score would be within. So we do encourage them to use those. And it kind of helps them figure out where they are in their current credit score range. But what they can do is look at their revolving credit. If they have credit cards out there, look at the ones that are the lower limits, make sure those balances are paid down. Also, if they have installment loans, there's a misconception of, hey, if I pay this off early, it's going to show I'm a better credit risk and improve my score. And that's not really the case. Taking an installment, whether it be an auto loan or something of that nature, paying it as agreed for the term of the loan is the best thing you can do with that type of an account to maintain a good credit score.
And one of the things that first-time home buyers tell me is that they close credit cards. they pay them off and close them. Tell me why that's not a good idea.
Well, when you close the card, it's going to stop giving you that positive credit history. If it's no longer active, it's no longer helping you. Taking a card, paying the balance down, you still don't want to leave it dormant. You would like to use it sporadically. You could use it every other month, every couple of months, but you want to show a recent date of last activity. Basically, what you're trying to show the credit bureaus is I have this credit available to me. I'm using it. I'm just using it wisely. I'm not maxing it out.
So what do you suggest for somebody who has no credit? Where should they start? What should they do first?
We've got some great tricks that we've learned over the years for starting and developing credit for new buyers. One trick that I love is if they can come up with a little bit of money, let's say $400. There's a real creative way to start two accounts. One, you go to a bank and you deposit that $400. Then you take a loan out against it, an installment loan against it. You're getting a loan against your own asset. It's going to develop an installment account on your credit history that you can then pay back, call it 12 months, 24 months, however you want to schedule that. But now you have that money that you can actually take and start what's called a secured credit card if need be. Sometimes you can get one without that, but if you need the security up front to get that line of credit, you have it. So you take an initial $300 or $400 investment, and now you have two lines of credit that are helping you.
Great.
So that's a good way to kind of get that started. We get asked a question about authorized users a lot. That's also a good way to help get things started, but it doesn't need to be your only credit. You have to have some of your own to offset that. But the right account as an authorized user can help you. The wrong account can hurt you.
Okay, so you're under contract. You've followed your tips. The buyer has done what they're supposed to be able to get a loan, to secure a loan. So now we're under contract. What are some tips that these buyers should or shouldn't do based on their credit so that they can get to closing?
Sure, and that's super important because we do a pre-qualification up front. Now we're under contract and rolling forward. We've got to maintain that. So one of the key things is you want to continue things as normal. You don't want to close accounts. We talked about that. You don't want to open new accounts. When you open a new account, typically the lender is going to be alerted through a system that's going to let them know there's now new debt that we got to consider.
So when you go through the target line and they offer you 10% off of, or 15 or whatever it is, off of your purchases, don't do it.
Don't do it. Because what happens then, we have to verify the new account. Is there a balance on it? Is there a payment on it? And there are times that payment may be more than what the debt ratio we talked about earlier can actually, allow.
Don't buy a new car.
Don't buy a new car.
Don't decide that you want to go and buy furniture for your new house.
That's right.
Unless you're paying cash for it.
Correct. And, and I'm not going to say don't in all cases, but do reach out to your lender and discuss it first.
Right.
There are times that it may not have any negative impact at all, and you're fine to do that. But then there are also times that you're on kind of the threshold of approval. You're on the good side of that, and you need to maintain that current credit profile to stay on the good side of that.
Yeah, and I have this conversation with new buyers all the time, and I talk to them about not making any purchases. And I had worked with this guy for a while, and we were under contract for a house, and we were doing a final walkthrough. And he pulls up in a brand new sports car, and I was like, and he said, no, I talked to my lender, I'm good. And I was like, okay, you've been trained well.
As long as you have that conversation, let's take a look
right.
at what that's going to do to your loan profile before you make those decisions.
Well, great. Okay, so a lot of my buyers question or not sure they can get a loan because they either have student debt, they may have a past doctor bill, or something that's kind of lingering or hanging out there. What do you say about that?
Well, my opinion is I can't give an opinion until I know what it looks like. I always advise clients when I'm talking to them and they say, hey, I'm going to go through, pay off some collections and things before I look at buying. I would like to look at the current profile. There are times when going in and paying off derogatory accounts from the past may actually have a negative impact on your score. So if the account's older, it's already been realized in that credit history, it's kind of done its damage. Mm-hmm. And if you go in and pay it off, it brings recent activity onto a negative account and can actually lower your credit score.
Oh, interesting.
And also sometimes if they have money available and they want to go in and pay these debts that maybe they didn't even know they have, we can strategically look at their credit report, figure out which ones are going to give them a benefit and which ones could actually work against them. So my advice is always, let's look at where we are currently Then if we need to give any advice as to what we need to do to move forward, we've got sound advice to work on.
Great. Well, those are some great tips. I know something else that I always tell my buyers is, don't try to keep anything from your lender. Just tell them so that we can deal with it up front, because nobody wants to get really close to closing to find out a negative surprise.
I always try to tell them that we're on their team.
That's right.
That they should use me as a filter. I say, give me all the info. What we need to bring through there to help you is going to get through there. If it hurts you, we're going to catch it in the filter.
That's right. As we wrap up today's episode, remember that building credit is an integral part of the home buying process. Educate yourself, set realistic goals, and stay committed to healthy financial habits. Talk to a lender. Local lenders are great. You see them in the grocery store. They're going to call you back. So I always recommend finding a good local lender that you can use over and over and over again. So I appreciate Matt coming in. Thank you so much for being with us and answering those lender questions. If you found this episode helpful, please subscribe, leave a review, and share it with others on their home ownership journey. Until next time, keep dreaming and building towards your perfect home. Carry on with Carrie Fitts, and we'll see you next time.